Hey, welcome to our weekly segment where we guide you on your journey to financial literacy.
We like to make these videos short and sweet in hopes that you learn a new economic term while keeping you updated on 3 financial events that happened in the past week.
Without further ado, let's get right into it.
First, we're going to talk about the cybersecurity breach at Colonial Pipeline, one of the biggest gas companies in America. Colonial Pipeline is a company responsible for supplying gasoline, diesel, jet fuel, and home heating oil all the way from Texas to New Jersey. This pipeline system is a hefty 5,500 miles long and transports up to 100 million gallons of gas daily. Back to the current news, this hack led to a temporary shutdown in Colonial's pipeline, and the organization itself even warned Americans to beware of rising gas prices. They said the most affected states would be Tennessee, Mississippi, and the entire East Coast. Furthermore, this additional increase in gas prices is already topping off a year where prices have risen to an average of $2.96 a gallon. AAA indicates that prices haven't been this high since November of 2020. Roughly 75% of gas stations in the southeast don't have fuel due to Colonial Pipeline disruption. And this is also accompanied by drivers panic buying gas, worried they won't be able to fill up in the future. The governors of Virginia, North Carolina, Georgia, and Florida all have declared states of emergency due to the gas shortage. On another note, the Labor Department in its Consumer Price Index reported that although gas prices fell in April, they were still 50% higher than last year. Colonial Pipeline said it expects to restore full service by this weekend. What's more surprising, however, is the fact that 2 reports say Colonial Pipeline paid a ransom to its hackers, who the FBI identified as the Russian organization known as DarkSide. Bloomberg said the amount was about $5 million, and there's no comment yet by the company. And in fact, when President Biden was asked about this ransom, he also gave no comment. And that brings an end to our Colonial Pipeline segment, and let's move on to the second segment of this video. Uber and Lyft are joining forces with the Biden administration to get Americans vaccinated against COVID-19. The White House announced that the 2 ride-sharing companies will be providing rides to and from vaccination sites for patients until July 4th. It is working with at least 35 state Medicaid programs or Medicaid managed care organizations to give rides to those on the plans. Coming back to the Biden administration, it is part of President Biden's effort to get 70% of American adults at least 1 dose of the vaccine by Independence Day. The program will begin in the next 2 weeks. Now let's move on to our third and final news segment before getting into the financial term of the week. U.S. stocks staged a powerful rebound following their steepest sell-off since October, but still had losses for the week. There were fierce swings both up and down, with the recent stock market rally almost as strong as the initial sell-off, as investors analyzed inflation data. Still, stocks ended the week with losses. The S&P 500 and the Dow 30 each lost 1.1%. The S&P 500 rose 61 points to 4,174 on Friday, with gains accelerating in the afternoon. The Dow Jones Industrial Average went up 361 points to 34,382, and the Nasdaq Composite added 305 points and went up to 13,430. These gains came off a rally that began Thursday, when major indexes broke a 3-day losing streak. Still, stocks ended the week with losses. The S&P 500 and the Dow 30 each lost 1.1%. The tech-heavy Nasdaq was the hardest hit, losing 2.3% for the week and logging its 4th consecutive week of declines, the longest such stretch since August 2019. Investors worried that a surge in raw materials could eat into profit margins, and a burst of consumer inflation could also prompt the Federal Reserve to pare back easy money policies that have buoyed the stock markets. Despite the stock market rebound, some investors still said that they thought the market was due for a pullback this year, even after its tremendous run-up. Many individual investors have jumped into this market, buying small dips on many stocks. Even after this week's declines, the S&P 500 is only 1.4% off its record high since May 7th. All we can do is wait and watch. And that concludes our third news segment, and now let's continue to our financial term of the week.
For our financial lesson today, let's break down the difference between short-term and long-term capital gain taxes. What I'm about to explain to you is extremely important regardless if you plan to do or do day trading or long-term investing, and it might even change your decision. So capital gains are when you sell an investment or asset, such as stocks, bonds, crypto, or real estate, for more than what you paid for. Basically, if you profit on one of those investments. The tax you pay depends on how long you held onto that asset before you sold it. Short-term capital gains means you sold it under a year from purchase, and long-term capital gains mean you sold it over a year from purchase. So now the important question, just how much are you going to be taxed on both short-term and long-term capital gains? Okay, so short-term capital gains is taxed just like your income, ranging from 10% all the way up to 37% depending on your income tax bracket. However, long-term capital gains are taxed at much more favorable prices. These gains can be taxed at 0%, 15%, or 20% depending on your taxable income. Anyways, that pretty much sums up today's financial terms. Hopefully you guys learned something new with this information, and please make sure to hit the subscribe button and the like button. Thanks so much for watching, and see you guys next week.